Hello and welcome. You're watching Buy Now, Sell Now. My name is Alex Matthew and with me is Cheryl D'Souza. You know, this morning we launched a new avatar of Buy Now, Sell Now, and we're more focused, if that's even possible, on getting your portfolio setting right. So we'll be taking live queries starting 11:20 on an ongoing basis starting today. And in fact, today is the best day to start because with the markets where they are currently, your portfolio likely will be seeing a bit of bruising. So if you're wondering what to do about an underperformer, or you're wondering what stock to add to your portfolio, join in live on any one of our social media platforms. That's YouTube, Facebook or Twitter Periscope, and you can ask your queries live. We'll get them answered by our experts. What else do we have in store for you? We're doing a special thematic conversation today on large cap ITs. Of course, TCS kicks off the earnings season with its earnings later this evening. We'll get your heads up on that as well. But the focus of today's thematic conversation is going to be large cap ITs. Let's very quickly take you through what's happening in the Indian equity markets. Then cuts of about 2.5% for the benchmarks and significant pressure seen across the sectoral indices. As of now, only the Nifty Pharma trading in the green, and that's an indication that the defensives are favored right now. Risk-off sentiment is pervading in the market. Cheryl will take you through the key stocks that are in focus on account of being in the news. Cheryl?
Yes, a couple of stocks that are in focus today. Alex, like you mentioned, IT sector definitely one of the top sectors that will be in focus because TCS will kickstart the Q4 earnings season today. But apart from that, you also have Infosys that will be in focus because the board has said that they will be considering a proposal of buyback of shares on April 14. That's the day when they will also announce their Q4 earnings. And also a reminder for our viewers that it is a trading holiday as well on April 14th, but it's going to be a jam-packed day considering the Infosys will come out with its earning and also will consider the buyback proposal. Apart from that, a couple of other stocks that are in focus today would be Tata Power. That particular counter is declining in trade today because the Economic Times has reported that the Tata Group has called off a near $2 billion investment deal with Malaysia's Petronas in Tata Power's proposed renewable energy infrastructure investment trust. So this is one of the counters that is actually tanking in trade, 8.5% downtick coming in for Tata Power. Apart from that, you have Solara Active Pharma Science. That particular counter is buzzing in trade. The board has approved merger of Aurora Life Sciences with the company. That particular counter, if you see on your screen, you'll see the stock is actually trading with an upward bias in a day when the markets are seeing sharp cuts. But apart from that, you also have the diagnostic stocks, Alex, that are actually buzzing in trade. Yes, there are going to be increased number of testing on back of COVID-19, and also you have Goldman Sachs that has gone ahead and has raised target prices for all these diagnostic companies. They're saying robust growth trends in the non-COVID-19 businesses, potentially higher than expected COVID-related revenue in FY22 due to the rise in infections, and that's why they're positive on the diagnostic stocks. And like I mentioned, Infosys and TCS, both of them also in focus today, and mainly TCS will be in focus because it will be kick-starting its Q4 earnings. But if you look at the sector as a whole, it is poised for a record quarter. So we have Sunitha now joining us to sum up what are we expecting from the IT sector in Q4. Sunitha?
Q4 is usually a weak quarter for IT companies, but it will be different this time. We are expecting strongest Q4 in the last 5 years. That's the kind of expectations we are going in the earnings season for IT companies. As far as tier 1 companies are concerned, we are expecting them to post revenue growth of 2.5% to 4% quarter on quarter in CC terms. TCS is likely to lead the pack with 5% growth in dollar terms, and the growth largely will come from the strong deal wins they've been having for last few quarters, and the ramp-ups have started, and that's what will be reflected in the top-line growth for tier 1 IT companies. As far as margins are concerned, we are expecting TCS margins to remain stable, while in case of Infosys, ISL Tech and Wipro, there will be margin contraction because of the wage hikes they've undertaken. As far as tier 2 companies are concerned, we are expecting stronger growth coming from them. We are expecting their revenue growth to be anywhere between 3.5 to 5.5% growth. We are expecting Coforge to post very strong numbers, while Infosys numbers might be slightly sluggish this time. It is all about the guidance for next fiscal year, and we are expecting all companies, whether it's top line companies or the mid cap companies, to say that they will be having double-digit growth. It might vary from early teens or mid-teens. That can be the only difference. But we are expecting a very, very strong guidance coming from all IT companies.
All right, so that very nicely sets the context for the conversation that we're about to have. Let me introduce you to the guests that we have today. We've got Kunal Bothra, as usual, and we've also got A.K. Prabhakar, who is Head of Research at IDBI Capital Markets. Welcome, gentlemen. Thank you so much for joining in, and good morning to you. I want to start with you, Mr. Prabhakar. We're having a conversation about Indian IT ahead of the earnings season that kicks off today. Let's in fact start with the question as to what you think is the key determinant of who is going to be a winner and who's going to be a loser in this time's IT earnings, and what is going to stand out to you.
Yeah, good morning. See, normally, Q4 quarter is a weak quarter due to lower working days. But this time the growth momentum should be better because of the digital solution and large deal ramp up. So we forecast a relatively better quarter-on-quarter growth. And for TCS, we expect now 1.7 to 3% quarter-on-quarter growth in constant currency terms. And Wipro also a nominal growth is what we expect. And when it comes to the stock which we like, we are very positive on HCL Tech and Tech Mahindra. But very important is the guidance that people are expecting. So Infosys revenue growth CC terms should be 11 to 13%. Now, and EBIT margin should be between 23 to 25% for FY22. And HCL Tech revenue growth should be 9 to 11%, and EBIT margin 20 to 22% for FY22. But Wipro, we expect the first quarter to be 0 to 2% growth. So Wipro is something we expect slightly weakness there. But very important, the salary increase which most of the company have done, that will have an impact on this quarter. So in mid cap, we like Cyient also.
Definitely. So on a sequential basis, there is expected to be some pressure on the margins for these IT companies, right, Mr. Prabhakar? But you mentioned HCL Tech. Among the large caps, you like HCL Tech. Why is that? And would you say that somebody holding on to, say, an Infosys should consider switching at this point?
No, see, when you take the next year growth, Infosys growth is likely to be very good. But as of now, the valuation wise, HCL Tech, the valuations are very attractive, and the quarter can have some dip due to the one-time payout of 7 billion rupees. So that is something which will have some impact on HCL Tech, but that is already factored in.
Understood. All right, but if I were to put you on the spot, Mr. Prabhakar, and if I were to tell you that my viewers today want to know which IT major should be in their portfolio, which name would you suggest that they should consider?
Yeah, HCL Tech and Tech Mahindra, because of the valuation gap between the in the top IT companies. Infosys, because of the buyback, there can be some momentum. But it is rightly priced or slightly on the higher side. So I would for me it is HCL Tech and Tech Mahindra.
All right, then let's go across to you, Kunal. Then we've got the suggestions that have come in on the fundamentals, Kunal, and HCL Tech is looking good, as well as Tech Mahindra is what Mr. Prabhakar says. Infosys perhaps with an outlook towards the next financial year. Of course, it's in focus on account of the buyback that it will consider later this week. On the charts though, what is it that we're looking at in terms of IT companies? We've discussed that there is quite a bit of strength in the run-up to the earnings. Today, of course, they're looking tad bit weak. What would you suggest in terms of what the charts are indicating?
So first of all, good morning, Alex. I think it's an interesting last 12 months, 13 months for the IT stocks. Now, what I've done is, from the March 2020 lows, if you look at the, the performance of these IT stocks and specifically the large cap names, so, restricting our discussion towards the top 4 quality large cap names, that's TCS, Infosys, HCLTech and Wipro. Now, if you look at the quality of performance in this last 1 year, it's been very, very intriguing because on one hand, yes, we know that TCS has been one of the strongest large cap name in terms of IT, but apparently it's been the weaker performer, of the the 4 stocks which I've mentioned. So if you look at the relative performance as well, that TCS has been a rank underperformer, and in fact, in this last 1 year, the strongest large cap name on the IT stocks is apparently Infosys. So Infosys stands out to be one of the strongest performer. As you can see on the charts as well, the strongest chart which you can see on the top grid is Infosys, which has managed to give returns of more than 275% from its March 2020 lows. And if you try and compare this with TCS, which is on the lowest grid or the lowest line, that clearly tells you that how TCS has been an underperformer not just in the last 2-3 months, but overall since the March 2020 recovery. It's underperformed even the IT index per se. But the second stock, which I believe has been one of my favorites on the IT index, on the IT sector, is Wipro. I think that stock, which turned out to be more of a dark horse. So if you can look at the charts for Wipro started off the recovery a bit more late as compared to the large cap IT names. But the pickup in the stock and the pickup in the recovery has been far more stellar as compared to the other large cap names. So if I have to pick and choose just one stock from the IT pack, I would go ahead with Wipro.
All right, that is Kunal's view coming in on the IT pack, analyzing all the top players in the IT sector and saying that Wipro is actually Kunal's top pick in the IT sector. If you can see, as seen in the chart as well, a stellar outperformance coming in from Infosys as well as Wipro in a YTD chart. All right, and that is the view coming in on the IT sector from both AK Prabhakar as well as Kunal. Definitely today is TCS's earnings, so all eyes on that as well. But let's take a look at which are the high risk and the low risk ideas coming from my experts today. Kunal, and what's on your radar today?
So in terms of intraday picks, I've picked up one buy and one sell, Cheryl. Of course, looking at the market theme, and the buy is restricted towards the pharma index. So in the morning, I had given a buy call on Alchem Labs. Now I'm suggesting a buy on Dr. Reddy's. That stock is managing to show some signs of strength yet again, breaking above and surging above the 200 moving average. Would suggest a buy on Dr. Reddy for a target of at least 5,200. Stop loss could be kept at 4,800. And the second would be from the financial services pack. It's a sell on L&T Finance. The stock clearly showing signs of weakness, breaking down with a gap down kind of an opening. Would suggest a sell on L&T Finance, targets to be kept at 82 and stop loss at 92 levels.
All right, those are the picks coming in from Kunal today. Definitely, Pharma Pack is outperforming in today's trading session. A buy on Dr. Reddy's and sell on L&T Finance. AK Prabhakar, what's your picks for today for high risk, low risk ideas for our viewers today?
Yeah, long-term investment pick will be Dr. Reddy's Lab. I stay with Kunal. Now, I think the Sputnik 5 approval is likely to be there in next 1 or 2 weeks. So they've asked for the data, and if the data if the committee is happy with the data, Sputnik 5 approval will come, and that will have a very big positive impact on Dr. Reddy's Lab. Already the valuation is very attractive, and we have already vaccinated 9 crore of our people, single jab. So I think if we have to do vaccination for at least 60% of our population, we need some more approvals so that they can produce the vaccines. So in that front, Dr. Reddy stands out. And to produce these kind of vaccine, Gland Pharma has capacity. They have a capacity of 78 crore as a capacity. And if we have to vaccinate the world or the total population which is 139 crores. Land pharma capacity has to be utilized. So that is a high risk idea from my side. Both are from the pharma pack.
Understood. All right, let's go across to Utkarsh Chaturvedi now. He's joining me live to tell you all about the ground reality that we're facing right now, which is a surge in COVID-19 cases. Utkarsh, what do you have for us?
So as we speak, Alex, there's a meeting going on between the Finance Department of Maharashtra, the state of Maharashtra, Ajit Pawar, the Deputy Chief Minister, and the CM himself, Uddhav Thackeray. Now, what is this meeting about? This meeting is about discussing a kind of financial plan at this point of time for a certain section of the society while the lockdown happens. And if the lockdown happens, remember that, in the all-party meeting yesterday, Uddhav Thackeray has gone ahead and said that, he believes that lockdown at this point of time is the only solution to keep, things under control. And despite all the checks, things are not being under control. Now, what they're doing at this point of time is they are looking at what can be the blueprint of this financial aid, which will be the sectors which will be covered, what will be the income population which will be covered, what will be the traders which will be covered, will it be the small traders or the big traders, what kind of incentives is the government talking about, is it a tax relief, is it direct subsidies. So it's an outline and a blueprint of a possible financial aid by the state government being worked out at this point of time if the lockdown happens. And remember that Wednesday is the cabinet meeting, and that will be a very, very, very important day, given that that's when a formal approval for a lockdown will happen. Now, many are wondering that what will be the form of the lockdown, given the fact that anyhow Section 144 is imposed in the state. You cannot really move out for non-essential in the night. And even if you look at the daytime, not all shops are open. It's only the essential services which are open at this point of time. So clearly, very important to note that what will be the blueprint of the lockdown. How severe from this will it be? Because currently what's happening is home delivery is allowed, maids are allowed, drivers are allowed. So will that also go out in the lockdown? And will it be a complete lockdown the way it was in March or April, or it will be the same thing continuing all the state? And most importantly, what will be the form of the financial aid which is given the state? That is something which is being discussed at this point of time.
You said it, Utkarsh. That is, in fact, what we're waiting for in terms of an update from the Maharashtra government. Thanks so much for that update. Mr. Prabhakar as well as Kunal, do stay with us. We'll come back just after a short break and take viewer queries. All right, welcome. Thank you so much for tuning in. For all of those who are tuning in on our social media platforms, sorry for the bit of a delay that we've had, but we're launching the query segment as we speak. The first question, and this is live on YouTube, is from Sheikh Sabir, who's asking about ONGC for a period of a quarter. And since it's a short-term query, I'm going to come to you, Kunal, on this one. On the charts, ONGC, of course, is something that has moved in the recent past on account of the crude fluctuation that we've seen. But on the charts, how does it look from the perspective of a quarter? Would you suggest a fresh entry at this point?
Not Alex, but so even though the stock has recovered as compared to many of the PSUs, I think if I'm not wrong, from 60 levels, the stock has jumped up to 120. But somehow, it's not been a stock which has shown greater degree of momentum. So it has a habit of going into very short periods of uptrend, and the uptrends last for very short duration of time, and it goes to more of a prolonged consolidation. So that's the worry. So when you're playing for a short-term time frame, 1 month to 3 month kind of a time frame, you need stocks which have stronger degree of momentum. And I think even from the support levels, ONGC's near-term support is at 90-92 kind of level. So, and the stock is at 100 zone. So, I believe if you're looking to enter ONGC purely as a risk-reward play and then expecting a bounce, from support levels, then I believe closer to 90 should be a good entry point. I think at hundreds, the risk-reward may not be skewed as well. The momentum is not present into the stock at current levels. So, I would suggest a better entry point for ONGC could be at 90 odd levels.
All right, another question coming in from YouTube. This one from Saurabh Dugar is on Bajaj Finance, and he's looking for an update. Saurabh, in fact, if you don't have the stock, and I'm going to ask the fundamental analyst here. We've got Mr. Prabhakar who's going to answer this question. It might actually be a good opportunity for you to enter. And the question really, Mr. Prabhakar, to answer is down about 6.5% in today's session. But do the prospects look good for Bajaj Finance on the fundamentals? Would you say that this makes sense to enter right now?
See, this year the growth has not been there. The management has been very conservative. They have been growing at 30% CAGR previously. So the growth is not there, and going forward, if if the lockdown, the kind of which we are anticipating, this will hamper the business in short term. But if we get below 4,000 rupees, it would be a good buy for a long-term investor. But another 10% from here, already it has corrected from 5,500, now 5,500 or 5,800 about few months back we have corrected. Now I think some more correction is on cards, and that will be the right time to accumulate. No, I would not say go out and buy, because financials are likely to do slightly bad because of the NPA thing which will be announced this quarter. So you can start to nibble around 4,000 levels.
All right. We also have one more live query coming in from Swaminathan Sundaresan. He's asking, what is the outlook for alkaline amines for the next 3 to 6 months time horizon is what Swaminathan is looking at. Kunal, what's your view on alkaline amines?
Well, I think it's a stock which has done exceptionally well. Many of these chemical stocks in the last 6-7 months or 12 months have gone to a different tangent altogether. Alkali amines, I think, is no exception from lows of I think 1,000 or 1,100 odd from 12 months back. The stock has done exceptionally well, gone up to returns of 5x, 6x from those kind of levels. So it's a stock which has done reasonably well, and for such kind of names which have done remarkably well, I think it's a prudent approach to have a buy on dips kind of an opportunity. Wait for these stocks to give you those round of corrections. So assuming if the market gets into a more of a volatile phase, then it's possible that many of these stocks will go through their natural course of correction as well. And I think that could be a good opportunity for you to lap up or try to average out these stocks if you already have holdings. So I would suggest that it's a good stock to hold from a longer term perspective, but may not be good price to enter at current levels. Wait for corrections to enter.
Good stock for a longer term perspective is what Kunal is saying for alkaline amines, but not the right time to enter this particular count. Prabhakar, what's your take on alkaline amines? Do you echo the similar sentiments that of Kunal?
See, the stock has run up. I think any correction, meaningful correction would be a good entry point. But when the stock, these chemical stocks are the focus because of China plus one strategy. The chemical or specialty chemical stock might not correct big. So you need to start nibbling slowly at current level also. And when there is a good correction, you have to add more. That is how we can enter specialty chemical stock. Otherwise, the kind of growth and the kind of interest people have in these stocks, it is not going to give us very big correction.
Understood. We've got quite a few queries coming in, gentlemen, on our social media platforms. So I'm going to have to request you to keep your answers just a little shorter today. We've got Suraj Dubey, who's asking about JSW Steel, and that really has been the flavor of the season, hasn't it been, Mr. Prabhakar? Would you suggest that out of the steel pack, though, JSW Steel makes the most sense on fundamentals?
Yeah, I feel so. JSW Steel results also will surprise the market. And that is the best in the pack, because it is standalone India focused compared to what Tata Steel is. And even SAIL is a turnaround, but I would stick out with JSW Steel.
Understood. I'm coming back to you, Mr. Prabhakar, on this next one. We've got a viewer on YouTube who's asking about IRCTC and what a stellar story it has been for this counter, right? Near monopoly in the space that it operates in. Would you recommend entering at this point as well? And would you say that you can accumulate it over a period of time?
Yeah, I know we were expecting that, due to the lockdown and few cancellation of trains, 1,500 would come. Now almost we are at 1,600, and this is the best level to enter the stock. It is monopoly in that segment. I think, one has to start accumulating IRCTC at current levels.
All right, that is Prabhakar's view on IRCTC. Let's talk about Barbecue Nation. Then we have a query that's coming in from Palash Agarwal. He wants to know what's your outlook for Barbecue Nation, Prabhakaran?
See, these are dining, where you have to go in person, otherwise you will not enjoy. And with the kind of second wave and maybe possibly if there is a third wave, no, I don't think fine dining restaurant is something I would buy. Now I am more better off with the QSR. So Jubilant Food or Burger King also after correction now makes a better thing for me. Westlife is one more where they have said 24/7 they will, seamless delivery they will make. So I think, the QSR would be a better option than the fine dining. So I would avoid Barbecue Nation at current levels.
Understood. That's a fair call, and in fact, quite the stock in focus in the recent past. We've got a question coming in from Geeta Sethi, and this is a short-term query. Kunal, sorry to keep you waiting. This is on UPL, and she's looking at it from the perspective of 1 year. What would your target be?
So I think from a 1 year perspective, I would expect maybe a 700, 720 kind of a target for UPL. The stock has been an underperformer. It has a phenomenon of whenever it restarts a rally, it at least tries to break past above its previous major swing resistance. So I think in that aspect, looking at the last 5 years of charts, I would expect that the stock should scale past above the previous multi-month high, which is at 700 levels.
Understood. Sheikh and Bikash have got questions about TCS and Wipros respectively. I do want to inform you guys that we had a conversation on large cap IT a little earlier in the program, and in fact Mr. Prabhakar said that he prefers HCL Tech in the near term on valuations as well as Tech Mahindra, and he also says that Infosys going to the new year will likely see a decent amount of growth. So we have addressed large cap IT. Having said that, I want to take Priyas Das's question, and this is on Affle India for the long term. Mr. Prabhakar, how do you view this counter in the context of the space that it operates in?
See, these are companies which are new technology. So the valuation will be expensive, but whatever is happening globally or in India, now these valuation, if we think about it, then we cannot buy. So you like the stock, you like the concept, then we need to buy. So start buying 10%, 20%, and there will be a odd correction like a day like today. There will be odd correction, and there are things which will come in next 6 months also. So slowly start to nibble if you are a long-term investor. Affle India is not for a short-term person. It should be for 3 to 4 years time period. Otherwise, the valuation doesn't justify at current levels.
All right, that's the view coming in on Affle India. We've got another query coming in from Manjunath. She's asking, how about Tata Motors for the long term? Kunal, we can see the correction in the Tata Motors stock price, and you've also been very bullish on Tata Motors. What's your view on this particular counter? Makes sense to buy at current levels for the long term?
So it's a good stock, should be held on for long term, but may not be, again, as I said, good entry price. I think a better entry price for Tata Motors should be at the 275, 280 mark, which was the previous low as well. So I think a buy on corrections, specifically till at least starting off from 275, 280 zone, should be a good entry point for Tata Motors.
All right, that is Kunal's view coming in on Tata Motors. Also, we have another query coming from Niladri Ghosh asking about Dixon Tech at current market price. Kunal, this particular counter has seen a sharp rally of late, also a PLI beneficiary. How does it look? How does the chart look for it currently? Does it make sense to buy at the current market price?
Well, I think on short-term charts, I would expect marginal, correction for Dixon Tech. I think if you look at the last, 2 months of price behavior, specifically from the March highs of, 4,200 on Dixon Tech, I think from there on, the behavior and the character of the prices have changed. It's now taking some resistance at 50-day moving average. I would expect that maybe the stock can go through one more round of selling pressure. Somewhere closer to 3,250, 3,300 is where I believe a short-term bottom could be in place for Dixon. So if you're looking to buy, I would suggest that a better entry point should be at 3,250, 3,300.
All right. So we've got a question coming in on the options front, I believe, Kunal, and coming to you on this one. Ultratech Cement is the counter, and we've got a viewer on YouTube, Kijar, who has bought this counter. He's basically asking about the near-term outlook for the stock. What do you have to say on that?
See, I think the near-term outlook is a bit, I would say, choppy, because what happens is when the market goes into a risk-off mode, even the strongest of the stocks, they would start caving in. So I'm sensing that the viewer has bought in a higher strike, call option of 7,000 on our Ultratech Cement. So I think in that aspect, I would expect that it's prudent enough to try and book your losses and come out of the position, because when the market gets into a risk-off mode, the higher swing highs, they actually become more of a resistance and becomes very difficult for the stocks, even if it's a strong stock, to scale past above those resistances in a market which is going into a risk-off mode. So net-net, I believe you should look to exit the positions if you're holding an out-of-the-money call options on Ultratech Cement.
Fair enough. All right. We've got Mohammed who's asking a question about Hero MotoCorp, and clearly the two-wheeler manufacturers have been in focus, Mr. Prabhakar, of late. Not the best numbers coming in on the volumes front, and some pressure being seen on margins as well. What would you say would be the call for Hero MotoCorp, though, for the long term? Would you say that it's still a good buying opportunity?
The two-wheeler space, due to lockdown and other things, the sales might get impacted, and if we see the FEDA number, the registration was not too great. That means retail sales are not too great. Your wholesale numbers could be better, but that is a different thing. So now I think if the stock corrects, it is a good buy. But I would prefer Bajaj Auto because of the export numbers which Bajaj Auto or TVS Motor are producing. So now export market from India is huge for two-wheelers. In that space, Bajaj Auto is the leader, and followed by TVS Motor. Their exports are improving. So they have some diversified markets also. So I would prefer that. But Hero Motor on a correction, if it corrects 10 to 12% from here, it will be an attractive buy for me.
All right, let's get on board our next viewer query, and this is coming in from Sheikh Aslamuddin. He's saying, is it better to hold on to IndusInd Bank over the long term? AK, what's your view on IndusInd Bank, considering what is happening to the banking sector today? But if you look at the performance, how it's been pretty good for a bank over the last, if you look at from the Feb lows. So what do you suggest for IndusInd Bank?
See, bank Nifty has almost corrected 20% from the recent highs. Now, and now I expect more correction in bank. Yes, if you are looking for a long term, IndusInd Bank is good, but I would suggest ICICI Bank is far better option. Comparing IndusInd and because it is a larger bank and more of digital also. So I think ICICI would be better, but I like IndusInd Bank also, nothing wrong about it. But banks for recovery will take minimum 3 to 6 months. So that is something you need to wait. And recovery also will be very slow and anemic, because the sector has started to correct and there are few headwinds going forward. I think you have to be patient investor in banks at this point of time.
Coming back to you on this next question then, Mr. Prabhakar, I normally refrain from asking about stocks that are highly volatile and maybe you could even call them penny stocks to a certain extent. 3i Infotech currently trading at 7.65. We've got a viewer who's asking for an update on it. AC Roy, what would you give as advice to him?
These kind of stocks I've never tracked, so I don't think I have any opinion on these stocks.
Okay, fair enough. All right. And also, just as a point to note to the viewer, do remember that you need to be careful about the stocks that you buy. Manjunath has got a question about SBI cards. I'll come back to you on this one, Mr. Prabhakar. On the fundamentals, what would you say are the prospects for SBI cards?
SBI cards, we need to understand 19% market share in that segment, credit card segment. Now, and HDFC Bank has a ban, so they are not able to grow business, whereas ICICI cards and SBI cards are taking that market share. So, the leader, which is HDFC cards, now they are not able to sell, and that is where SBI cards is now gaining. So, from 19, I think, if they can move to 20-21% market share, that is going to be great. And see, now these are metro cities where people are using digital platform. Once rural economy starts to use digital platform, yes, State Bank of India, which has 23,000 branches, will sell more credit cards, and they will have more accounts. So I think SBI cards for a long term is very good. Yes, short term, due to this market volatility, it might correct. No, I think that will be a very good opportunity for a long term investor to buy.
All right, that is the view coming in on SBI card. And since we are running out of time with the query segment, but this is a note for all our viewers who are watching us live that we will be back tomorrow at the same time. So do tune in and send in all your queries. But on that note, thank you, Kunal, as well as AK for joining us and resolving all the viewer queries. We will see you soon as well. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more stock-specific news on the other side of the break. Welcome back. You're watching Buy Now, Sell Now on ET Now, and definitely not a great day coming in for the markets with a spike in COVID-19 cases. You can see deep gashes on benchmark indices. You can see Nifty that's down over 440 points. Sensex also is testing the 48,000 mark. But definitely today we are going to kickstart the earnings season. And Jayesh is here with ET Now Insight on how the street is estimating the range for EPS and which sector one must keep an eye for. Jayesh?
The much anticipated fourth quarter earnings will kickstart today with TCS reporting its quarterly numbers. Let's also have a look at how the Nifty EPS looks like as per the analyst estimates. At the start of the quarter, they were anticipating an EPS of about 160.1 rupees, which was revised slightly downwards to 159.6 towards the end of the quarter, and that estimate currently stands at about 158.6. So as you can see, that analysts are anticipating a higher EPS as far as fourth quarter earnings are concerned. Going by this, if you have a look at the valuation picture, the Nifty trades more or less in line with its long-term valuations. If you have a look at the FY23 picture, 823 rupees is the EPS that is expected, which translates into P multiple of about 18 times. So which are the sectors that will be in focus this time around? One is the metals pack on the back of a strong pricing environment as well as higher volumes that we've had. Secondly, you have the private banks and NBFCs, which will see a moderation in slippages and the improved disbursements that we've had this time around. It is expected that IT will continue its strong performance from the previous couple of quarters as well. And then you have the auto sector, which will be in focus as the operating leverage benefits are likely to offset the higher commodity prices during this particular quarter. Lastly, the consumer staples and durable sector, that will be in focus on the strong demand recovery that we've had despite the commodity price inflation that we've had in recent times.
All right, thanks so much for that, Jayesh. If it wasn't for COVID-19 and the markets, the headline, of course, today would be TCS results. It's still very important to track. So here's Poonam with a preview of what to expect in the fourth quarter results of TCS.
Well, TCS is all set to announce its Q4 results today and expect industry-leading growth by TCS. Expect a 4.3% quarter-on-quarter revenue growth in constant currency terms, and a dollar revenue of $59.86 million is seen. In fact, if you look at the overall revenue growth, it would be aided by a ramp-up in post-bank deals as well as the prudential financial deals. And if you look at the EBIT margin, well, we should be seeing some amount of the recent wage hike impact being offset by a higher utilization as well as offshoring, and hence expect an EBIT margin to be largely flat at 26.6% during the quarter. The profit is seen as 92.65 crore by TCS. Momentum is likely to be aided by overall core transformation as well as digital deals, and management is also likely to retain its FY22 double-digit growth guidance. Of course, we should be watching out for the overall outlook on the revenue growth and outlook on the key verticals as well, along with the impact of the resurgence of COVID cases in Europe and the impact that it would have on business. And also overall, if you look at the stock, it is up close to around, it did hit a 52-week high just on 9th of April itself, and the stock trades at close to around 28x FY23 PE, but most of the analysts do remain fairly bullish on the stock price.
All right, Poonam, definitely that is what we are expecting for TCS. But apart from that, today even Infosys is in focus. They've informed the exchanges the board will be considering a buyback proposal on April 14th along with their earnings. So take us through those details. What should we expect from Infosys?
Well, watch out for Infosys. The board would be considering buyback on 14th of April along with the results, and analysts will expect the buyback could be anywhere worth between $1.5 to $2 billion, which translates into 11,000 crore to nearly around 15,000 crore. As per the buyback rules, company can in fact buy back up to a maximum of 25% of the net worth, and in fact if you look at the Infosys net worth, it stands at nearly around 71,600 crore, as well as they do have cash and cash equivalents worth nearly around $4.5 billion. So a maximum buyback possible could be nearly around $2.3 billion, which is rupees 17,900 crore according to the analysts. Also, if you look at the recent buybacks, well, the last buyback by Infosys was announced in January 2019, which was worth nearly around 8,200 crore. This was via an open market route with a buyback price of rupees 800 per share, and previous to that, the buyback was worth nearly around 13,000 crore. So yes, this time the buyback is expected anywhere around the 11,000 crore to 15,000 crore, and Infosys is also likely to announce good results. CLSA does have a buy on Infosys, and they do believe that a potential buyback could be anywhere between $1.2 billion to $1.5 billion, and they do state that although the buyback would be EPS neutral, it would be ROE accretive.
Thanks so much for that, Poonam. Now, 1.7 crore or 1.7 lakh fresh cases of COVID-19 in the 24 hours to 8 a.m. this morning, and a lot of them coming from Maharashtra. Perhaps that is why we are talking about the possibility, the very real possibility of a full lockdown in the state. Utkarsh Chaturvedi has been tracking this live. There is a meeting that is scheduled for today, and we could in fact be getting an early insight as to what may be under consideration. Utkarsh, what are you picking up?
So, Alex, what we are being now told is that the next 2 days will be a preparation for the lockdown. Now, that's what Maharashtra government wants to do. That is why they have been very vocal about the fact that they want to do a complete lockdown, that it should not be the last time that people aren't prepared that there will be a lockdown, and that's why there are meetings being held with the health officials. There's meeting being held with BMC as we speak. To the meeting going on for a possible financial aid for a certain section. Now we don't know what can be the financial aid be. They're talking about tax relief to small factory owners, tax relief to small shop owners, as well as some of the other direct subsidy schemes. But they're thinking about it, that how there can be a proper financial aid which can be given to people during the possible lockdown, which can come in effect from Thursday. Now remember that Wednesday is that very important cabinet meet, but what everybody believes is that more or less Maharashtra government has made up its mind. They want to go ahead with the complete lockdown. They will be announcing the same and going for a formal approval on Wednesday, and then really going ahead on Thursday with the same. But that's what we have been told at this point of time. So the preparations have started. Important round of meetings happening in the CM office at this point of time. As I said, one is of the financial aid, what kind of tax release there can be given to the shop owners, the factory owners, to the people who are from the last, the people who need some kind of support. Will there be any direct subsidy schemes or direct schemes which will be given to them? That is something which has been spoken, which everybody is speaking about. But the most important part is how strict will be when we say complete lockdown. Will it be like how it happened in March? How it happened in April? Will maids not be allowed? Will house helps not be allowed? Will Swiggy, Zomato and home delivery not be allowed? That is something which everybody is really talking about, because apart from that, more or less, we are into a lockdown state in the city of Maharashtra at least. But at least at this point of time, you can roam around on the streets till 8 a.m. But what we have been told is that there can be a possibility of complete lockdown. What will be the relaxations is just that everybody is trying to really look at. Otherwise, more or less, the government has made up its mind. Preparations have started, and you can see an official communication coming in from on Wednesday after the Maharashtra cabinet meeting.
All right, thank you, Utkarsh, for getting us those crucial details coming in from the state of Maharashtra. And what Utkarsh is picking up, the sources are saying that the Maharashtra is likely to go for a full lockdown from April 15th, but the decision will be only made after the cabinet meeting on Wednesday. All right, and also, the second wave of COVID-19 is here, but will it impact businesses across? We caught up with Mahindra Group MD and CEO Anish Shah, who shared that the focus is right now on enhancing growth. He also aims to clock single-digit growth in tractor and farm machinery. Listen in to his views.
We've got to find a way to keep the economy running, at the same time protect lives. The numbers that we see today are far higher than what we've seen even in the first wave. And therefore, I think the government has a very difficult dilemma on hand. And they have to take certain actions because protecting lives is important. The question is, how are those actions set up? Where, if I were to look at it as concentric circles, the first concentric circle is keeping the workers safe, keeping our masses protected from an economic standpoint. And if that is done, then that helps the masses and that helps balance lives and livelihood. Now, at which concentric circle do you draw the line? That I would leave to the experts to decide. But there has to be some action taken. At the same time, we have to protect livelihood.
Okay. While preparing for our today's interaction, I was scanning through research notes, and a research note from CLSA has hit my mailbox, and it talks about factors why the Mahindra & Mahindra stock off late has underperformed Nifty. While it outperformed for 2020, first half it is underperforming. And one concern, which in a sense is a common concern which I'm getting from some industry observers also, is that the tractor business has peaked out and last year's base effect would kick in, and now it will be difficult for the tractor industry to grow in double digit. Is the concern valid?
So the tractor industry has always been cyclical to some extent. We've seen a very significant growth last year, about 20% year over year. We don't expect that 20% growth again. But at the same time, the base is much higher today. We would expect a single-digit growth this year, not a double-digit growth. But beyond tractor, there are many more growth levers.
All right, well, interesting updates coming in there from the new head of Mahindra & Mahindra. Do stay tuned, we'll bring you that entire interaction. For now, that's all we have for you in this edition of Buy Now, Sell Now. It was a pleasure bringing it to you. Do stay tuned, lots more coming up in just a short while. This is ET Now.